All right, today we're diving into the Q2 2025 earnings for 22nd Century Group. That's ticker XXI. And wow, this was a really interesting one. A quarter that was all about a massive, and I mean massive, strategic pivot, and a market that, well, was not having it. So, let's get right into it. Before we even touch on what management had to say, we're going to start with the market's gut reaction. You know, the immediate, unfiltered verdict. And yeah, that verdict came in fast, and it was pretty harsh. In pre-market trading, right after the numbers dropped, the stock plunged over 10%. So what on earth happened to spook investors that badly? Well, here it is. This is the big one. Take a look at that staggering miss on earnings per share. Analysts were expecting a loss around 27 cents. The company came in and reported a loss of $13.16. I mean, that's not a miss. That's a completely different universe. They fell short of the consensus by over $12. Okay, so first things first, let's really dig into the numbers, the financials that caused that brutal market reaction. Let's start right at the top line, revenue, just over $4 million. The street was looking for closer to $5.5 million. That's a year-over-year revenue collapse of almost 50%. And as you work your way down this table, the story doesn't get any better. They're actually losing money on what they sell, that's a negative gross profit, and the net loss is still sitting at $3.3 million. I mean, these numbers, just on their own, paint a very, very tough picture. But, and this is a big but, here is where the story completely changes. Despite these awful-looking numbers, management spent the entire call basically telling everyone this is a moment of transformation, not a moment of failure. So, let's hear them out. Which, makes you wonder, with financials that look like that, what in the world could the bull case possibly be? Well, management has an answer, and it all comes down to one single product. CEO Larry Firestone really just laid it all out there. He's not looking at this as just another quarter. For him, this is a total reboot of the company. The entire bull case is about forgetting what they were and focusing on what they're trying to become. And the heart of this new beginning is their product called VLN, which stands for Very Low Nicotine. Now, the magic words here are first and only. This is the only regular combustible cigarette out there that already meets the FDA's proposed rule to slash nicotine by 95%. That regulatory advantage, that moat, is literally the cornerstone of their entire strategy going forward. So the CEO kind of explained his view of the market in these 4 lanes. He said, look, we're not trying to compete with pouches. He's positioning VLN to go head-to-head with those new heat-not-burn products, and this is the big one, to be ready to capture the gigantic market of standard smokers if or when that FDA mandate actually becomes law. And this really gets to the core of it. That ugly revenue number we saw? According to management, that's actually part of the plan. They are intentionally ditching their old low-margin business of making products for other companies, that's the CMO business, to focus 100% on their own high-margin VLN brands. So they're telling investors flat out, expect our revenue to stink for a while because we're trading it for better profits down the road. And they did point to a little bit of good news with their first big shipment to a top 5 convenience store chain just hitting shelves in August. Okay, so that's the story. That's the plan. But, the road from a good story to a profitable company is, well, it's almost never a straight line. Let's look at the big hurdles and the potential game changers on the horizon. And this right here, this is the real tug of war for anyone looking at this company. On the hurdle side, profitability just got pushed back again. Now we're looking at the first half of 2026. They ended the quarter with only about $3 million in cash, and the CEO basically admitted they're probably going to have to raise more money soon. But then you look at the catalyst side, and the potential is huge. That FDA mandate is a massive tailwind. They have a lawsuit going to trial in November that could bring in $9 million, literally tripling their cash. And some key regulatory and product milestones are coming up fast. It's a classic high-risk, high-reward setup. And if you map it all out on a timeline, you can see just how critical the next 18 months are going to be. They've got a string of make-or-break moments. It starts with an FDA submission this quarter, then that huge lawsuit in November. By March of 2026, they've got a debt deadline staring them down, which leads right into their new profitability target. And it all kind of culminates with that super important renewal of their MRTP, that's their modified risk tobacco product status, at the end of 2026. This is the calendar that every investor is going to be glued to. So, after all of that, what should we expect to hear on the next earnings call in 3 months? This is where we take everything we've learned and distill it down into our forward-looking rating. All right, Based on exactly what management told us, our prediction for Q3 is pretty straightforward. We expect revenue to go down again as they keep phasing out that old CMO business, but, and this is the number to watch, we'll be looking at that gross margin line like a hawk. We expect to see it get better, which will be the very first real sign that this big strategic pivot is actually starting to pay off.
And for the stock price, honestly, expect more of this roller coaster. The price is just going to be a battleground between people reacting to the bad short-term numbers and people buying into the long-term story. It's really the numbers of today versus the vision for tomorrow. Which brings us to our final rating. For the next quarter, we are assigning a rating of underperform. Look, the long-term story they're telling is compelling, no doubt. But the financial problems in the here and now are just too severe. They're still losing money, they're low on cash, and there's a very high chance they'll have to issue more shares, which would dilute current shareholders. The market is going to need to see proof, real proof, that this pivot is creating a believable path to profit before it's ready to really get behind this stock.
And as always, remember, this is not financial advice.